Cathie Wood, the founder, CEO, and Chief Investment Officer of ARK Investment Management LLC, has become well known as a stock picker and pioneer with regard to putting resources into disruptive innovations. In this video, we'll see why Cathie Wood suggests that China's economy has already crashed. So let's start. The damage caused by COVID seems never-ending for China. China's enormous services area just contracted at the second most honed pace on record as COVID lockdowns hit organizations hard. The Caixin Buying Supervisors list, an intently watched pointer for evaluating the condition of the economy, plunged to 36.2 in April from 42 in March, as per a study delivered by IHS Markit on Thursday. A perusing under 50 demonstrates compression, while anything over that measure shows extension. The sector represents the greater part of the country's GDP and more than 40% of its work. What's more, with review information showing China's assembly area additionally contracting last month, the world's second greatest economy moved in reverse in April. While conditions could work this month as COVID disease rates simplify and authorities attempt to restrict the harm to the economy, enormous pieces of Beijing have recently been put under more tight limitations, and a few financial specialists are currently gauging that the Chinese GDP will decrease in the subsequent quarter. Has Chaoyang been shut down? Why? The country's capital has successfully closed down its biggest area, Chaoyang, suspending transportation inside it and empowering 3.5 million occupants to telecommute as a feature of its most recent work to control COVID-19 cases, neighborhood specialists declared Wednesday. The almost 6-point decrease in the administration's actions in April was second just to the breakdown in February 2020, when China's economy approached stop as it struggled to contain the underlying COVID flare-up that began from Wuhan. In that month, the Caixin Services PMI plunged to 26.5 from 51.8 in January. What has happened to the numerous businesses in China? Businesses on the planet's second biggest economy were at that point wrestling with rising energy and natural substance costs when COVID lockdowns hamstrung their tasks further. It has additionally become more diligent for firms to pass the greater cost to shoppers due to the effect COVID limitations have on client interest. That has meant even lower business. A few organizations impacted by the drop in orders laid off specialists to bring down costs, said Wang Zhe, senior financial expert for Caixin Insight Group. The action for work in the administration area has been under 50 for 4 sequential months, the overview showed. The information came only hours after China detailed a precarious drop in traveler spending for the Labor Day public occasion. The dip in tourism spending. Tourist spending was just 64.7 billion yuan, $9.8 billion over the 5-day occasion, down 43% from a similar period last year, as indicated by an explanation of the Ministry of Culture and Tourism late Wednesday. Individuals made 160 million homegrown vacationer trips during the occasion, down 30% from a year sooner. The information again features how China's zero-COVID strategy has negatively affected its economy. On Saturday, PMI studies from the public authority showed that both processing plant and non-fabricating exercises dropped in April to their most awful levels since February 2020, what recent analysis suggests. As the exceptionally contagious Omicron variation spreads rapidly in China, the nation is engaging in its most awful episode in over 2 years. Up until this point, no less than 27 Chinese urban communities are under full or incomplete lockdown, which could be influencing up to 185 million occupants of the nation over, as per CNN's most recent estimation. That incorporates Shanghai, the country's driving monetary focus, and a significant assembling and delivery center point. The city has been under lockdown since March 28. In spite of the fact that specialists began to lift a few limitations last month, in excess of 8 million occupants are as yet prohibited from leaving their private mixtures. The Chinese government actually sticks to its severe zero-COVID strategy over 2 years after the underlying episode, when the remainder of the world is figuring out how to live with COVID. The strategy includes required mass testing and severe lockdowns to contain the spread of the infection. Be that as it may, monetary expenses are rising. Cathie says numerous financial specialists have minimized their China GDP development focuses during the current year, referring to gambles from the zero-COVID strategy. Last month, the International Monetary Fund brought its China development estimate down to 4.4%, well below the public authority's true objective of around 5.5%. This is the end of the video. We hope you found it helpful. Stay tuned for more. Thanks and goodbye.